It is the post-market edition here on Tuesday, September 21st, 2010. My name's Des Woodruff, a trading mentor and analyst for Grok Trade, and the market's in choppy. Mr. Ben Bernanke came out at 2:15 p.m. Eastern Standard Time today and said they're going to leave rates unchanged. Doesn't shock anybody, and after turbulent trading, thereafter that report, about 30 minutes after that report to be exact, the markets decided to do an about face and start heading back south. We did see the banks. Check this out. The banks actually led the markets down all day long. The banks were laggy all day. The VIX was high all day. The Dow ended in positive territory, but the S&P down, the NASDAQ down, and the Russell's way down. Pay attention to that. It doesn't surprise me that the Russells and the bank were down the most, with a nice little pop here in the VIX. So we're looking at some, well, look at this. Gold also up almost a full percent. It's interesting to see transportation up as high as it is, with the Dow being as low as it is. But here we are looking at the S&P daily. We rise yet again. Look at this. We just keep climbing and climbing and climbing. We, on so many indicators and so many oscillators, are so overbought right now that the markets are just yearning to pull back, to take a break, to take a breather. And we do have a reversal pattern in the making. Technically, this is not a bearish harami, technically, because of the small higher body here. It's just, oh my goodness, so, I mean, we're just slightly higher. That makes this a bearish thrusting pattern to the downside. But we'll have to make a new low, and I'd like to see a close below this new low. We got up here near 1150 today. That's at resistance coming across here. And then we came right back down. But everybody's eyes at this moment are looking for a very obvious pullback in the markets. So do not be what we call uber bulls right now. It's okay to be that on the first stretch, but when you get up here so high, I mean, do yourself a big favor. If you're still thinking bullish, go back, count how many bars this is going up, go back in time and tell me the last time you've seen a run this long. And that should, open your eyes to the probabilities of a correction taking place. The only thing that could really save this right now from a decent pullback would be a high base type formation to give itself a base in which to use as support. But I'm going to drop a Fibonacci here. And I know a lot of you don't know anything about fibs, but it's just a measurement of retracement. So a measurement of retracement, I still consider bullish if we get down to the 61-62% retracement area, which would put us right at this trend line. So a sizable retracement down here would be a nice area to be looking for along. But if it only goes down 38% or 25%, that's even more bullish on a retracement. So that's something I'm looking at. If I look here at the Dow, we came up, we did pop over a major resistance line, but look how we came right back down, closing at it again. The NASDAQ, we popped up over this area and then we stall out, but we were right here above this resistance. So it's nice to see it. There's really nothing stopping it from going up here to 2400. We'll just have to see if the markets will maintain its strength. The Russells just smacked its head right here at this 670 that we've been watching. Smacked its head and dropped. So it's going to be tough. We need to get some legs under the markets here to keep blasting through. But right now, things tend to be leaning to the bear side. Here we do have what's called a bearish harami formation. But let me show you the banks. The banks have just been brutalized. I mean, we're down under major moving averages. Remember, the markets are only as strong as the financials, and the bank here is in deep trouble. This is on the NASDAQ, which is the biggest index of banks that are out there, but you have here what's called a bearish flag or a bear flag formation. Go to freeonlinetradingeducation.com, click on chart school. When you click on chart school, look for bear flag, and that'll show it to you. I'm gonna pull a fib here, drop this down, And we're right here at the 50%, almost at the 61. I mean, this is a juicy area to come breaking down. If the banks index does break down, we need to get down here below 1650. It looks like 1647, a close below that, or maybe even this swing right here. If we bust below that, man, the question is how long will that leg go down? So something to be watching for. We did get an uptick on volume today. And if I go back here to the S&P, a lot of people were talking about the inverted head and shoulders, shoulder, head, shoulder, the neckline getting pierced yesterday. However, that's less important to me than this big triangle that we had here. This is what we were focused on. Hit our head, we hang up and blasted through. And this precisely is, as you guys know, I was looking to go bearish down here on a breakdown. Never did. We popped up. We got over these moving averages, started going long. And then I went long again coming up. But I'll tell you, in the evenings, I like being hedged. Like tonight, I'm hedged again. I'm going into the evening, and I will add to my hedges to go bearish if, in fact, the markets give us a lower low tomorrow. If that happens, it'd be, look at this higher low, higher low, higher low, higher low. I mean, we just had a whole series. We had a lower low there, lower low here, with the rest of this couple weeks of just higher lows. If we get a lower low here, I'll be looking to be bearish on this pullback going down. Now, I'll still have my longs going, but I still want to make money on any sort of pullback the markets might give me. But if we do not drop, I'll be looking forward to unpeeling my hedges early in the morning. And that's what you need to understand, that I talk about being hedged. I like to be hedged over the weekends. I like to be hedged overnight. So some people would consider me more of an intraday trader or a day trader. And because I don't like that risk, and trading is all about risk. So make sure that you have risk management principles in play. You have money management principles in play, and also size management. These are all things that we personally teach inside our schooling, but you need to know that as a trader. And what I like to do is like to take the risk off the table. I don't know what's going to happen overnight, so I'm not going to guess. I'm not a gambler. I'm the house. I stack odds in my favor, and there is a huge difference. I'm running a business. I'm not scratching lottery tickets. And what I want to do here is wait until see what happens tomorrow, unload either my hedge or my longs, whichever one is the weak one, so I can make money throughout the day on the strong side. And I like to manage it throughout the day because you do have trend reversals that take place intraday. So, that was a lot of information. And this is a bona fide fact. I know a lot of traders, been doing this 13 years. And I run a big trading club here in the state where I live, Indiana. And I've been published and been a mentor for some serious brands for many years. One thing that I know of all my trading friends that I have, my colleagues that are out there, the ones that walk the walk, not just talk the talk, and there is a difference, that 100% of those that I deem good, solid traders who are doing it in the markets, 100% of them have one thread in common, one thing in common, and that is 100% of them have a trading mentor. And I can say that myself. Scott and Jonathan and Miguel and anybody associated here at our website and others, you ask them, do you have a trading mentor? And they will tell you yes. That is so important to have a trading mentor in your life. And we really, truly believe in our heart of hearts, feel like we have one of the best educational programs that anybody could ever ask for. And I'm very passionate about that. But anyway, Saturday, Sunday, and Monday, we have our next mentoring session. We only do it once a month. And we're going to have a group about 5 or so. Only looking for a couple more spots. We take up to 8. So if you're interested, just fill out the form here and we'll get back in touch with you, the mentor form. Or go to meetthementors.com, watch that video and get in touch with us, and we'll hook you up. So take care. Safe trading to you. Bye.